Okay, fam, welcome back. So today we're going to be going over the macro markets overview for the month of February. This is obviously going to count towards the current day. So with that being said, let's get it. Okay, so we're going to actually start this video a little bit differently. So instead of starting with the indices like we usually do, actually going to start with Bitcoin this time and get this out of the way. So the thing I will say about Bitcoin Okay, hold on one second, y'all. Sorry about that. I don't know what just happened there, so let's try this again. So with Bitcoin, the thing that is the most important thing right now, in my opinion, to pay attention to is where the current support levels are. Because if you're looking to buy Bitcoin or anything Bitcoin related like BITO or BITX or Maxi or anything that's Bitcoin related or crypto related like MSTR, Coinbase, any of the leveraged ETFs, dividend ETFs, anything related to Bitcoin or crypto in general, because Bitcoin, again, is the market mover, you want to pay attention to these support levels, okay? Just posted this on X, so these levels are going to be 77,000 and 69,000. There's a couple of reasons why 69,000 is a major level. We'll talk about that in a minute. It's not just because of the green zone here, but those are the levels you want to be looking at. To kind of try to buy exactly at support. One of the methods that we took on during the 2022 bear market, and I don't think I've ever told you this, is during the 2022 bear market, what we were doing was buying at macro support levels. So when we go over to the indices, I will show you guys this so you can see what I mean. But it's an entirely different strategy for a different market sentiment, okay? The other reason why I'm pointing out 69,000 on Bitcoin is because you can see this massive monthly macro trend line here. We've only tested it roughly about 3 times. Okay, once back here at the bottom, once here in October 2023, and again almost in October or August, September of 2024 last year. So if it drops down here on the monthly, it could bounce right off of this trend line at 69K on the monthly. Why does this matter? Because last time this was whether it held this or not was the ultimate predictor of the beginning of the 2022 crypto bear winter. Now, the timing for a major bear market to take place in crypto right now is off. It should not happen until right around the end of the year or the start of next year. So the timing is off, but we still have to watch it regardless. I will say Bitcoin does look quite bearish. I'm not going to lie. I told you guys before that these candle lows being created here, it looked very much like a distribution at the top of a move. Again, accumulation happens at the bottom, distribution happens at the top most of the time. It's not always going to be the case, but 95% of the time, that's probably what's going to happen. But I told you guys these lower candle lows here, candle close lows, getting lower and lower and lower, even with these wicks, was not spelling good news as far as I'm concerned. And we now have confirmation of it because in 20 minutes, Bitcoin's going to close at 80,000. That's obviously not great. It could go down to 77,000 and bounce immediately. We could see a green week this upcoming week, or it could go further down to 69,000. Keep an eye out on those levels, okay? All right, so next one here I want to go over is the fear and greed index for crypto. Again, in my opinion, now is the time, not financial advice, but if you're going to buy crypto, if I was going to buy crypto, native crypto or anything crypto, now would be the time to do it. Because it just looks absolutely atrocious. Everybody's thrown in the towel. Nobody's bullish anymore. That is the time you want to be taking a look at buying. Unless, of course, there is a crypto bear market, which, again, I highly doubt that's the case. And even if that was the case, we would have to snap all the way through 60,000. And we would have to break the monthly trend line, and neither one of those have happened. So very cheap prices. Fear and greed on crypto is at 27, so something to keep in mind. I do want to point out the Fed watch tool as well. So it appears something in the market has changed. The market's predicting no rate cut this FOMC, no rate cut the next FOMC, but in June, apparently now they think there's going to be a cut. So we could see some QE on the horizon. That could also be because of a recent speech that Powell had. You guys are free to go look at that in your own time. But it appears that the market thinks there's going to be a cut in June and potentially even another cut in September. And maybe even a third cut this year. So very interesting. So anyways, that's crypto for you right now. We'll go over crypto more in depth in a different video. So in terms of the S&P 500, so this candle close pushing against 5750 right here is not great. You can see it barely closed below it. That's not a great sign. So maybe 5700, it could go down to 5660. We could even see a drop all the way down to roughly about this 5400 area, which is major support for the S&P 500. One of the reasons why I think this may likely not be the case to actually happen, and I'm going to show you guys this in a minute. I have to pull this up so you guys can actually see it. So let's see if I can. Oh, whoops. So this is actually the wrong indicator. Let me get rid of this. So what I want here is actually a simple moving average. I think I could be wrong about this, but I'm pretty sure this is the indicators. So let's go 200, make this one white so we can actually see it. So what we're looking for here is actually the 200 daily moving average. Yeah, so you can see it right here, and I want to point this out, okay? This has been a significant level of support in the past. The bear market lows, not bear market lows, but back in October, we saw a bounce there, okay? That's this kind of white line you see here. We kind of trended around it during the bear market bottom, got a bounce here just below it in November 2023. Then we retested it again in July 2024, retested it, we got close to it. This trend line obviously was touched, right? But we got very close to this line and it bounced almost immediately off of it. The point I'm trying to make here is that this is a significant line, okay? It's a significant level, and it does line up very closely with the support down here. And I think it's very good to pay attention to because it could easily just pop straight back above it and go back up. That's always a possibility. So I'm going to get rid of that real quick, and we'll pull up the, the 51 EMA. I need to create some templates for these or something, so I have separate setups for separate videos here. I'm not sure why I haven't thought about that before, but it is what it is. So anyways, so here's what it looks like on the EMAs. We're still above the EMAs. We have a potential death cross coming here on the 9 and the 21. That's not great. So, excuse me. Jesus. Okay, so anyways, what we're looking at on the SPX is kind of a flat top, a little sell-off from there, 7%. Again, we're in bearish seasonality. It's kind of expected that we would get a pullback around this time. So maybe you guys are shocked. I'm not, because again, I understand a lot about finance, okay, which I'm trying to teach you here on this channel. But yeah, anyways, regardless, so major levels here we're looking at is 5650 and 5400 as the next major support levels. Again, the EMA is lining up right around that major block of support there. That's something to keep in mind. Do keep in mind that the daily is almost oversold on the RSI. It appears to be bottoming out. And the 4-hourly is in what appears to be a bullish divergence right now. So next one here we got is the NASDAQ. Again, bullish divergence. You can see the RSI creating higher lows while the price is lower lows. That is on the 4-hourly time frame. That's obviously extremely bullish, right? So the daily time, daily time frame appears to be bottoming out as well while the price is still pulling back, although these kind of lows right here suggest to me that maybe the bottom may be about ready to be in. So we're almost oversold on the daily and just kind of bobbing around the lows there. NASDAQ also holding the EMAs here while the top ones are curling over. But keep in mind, this thing could easily V-shape recovery. It did it back here too. After 3 weeks of red, right into the red EMA like we're seeing right now, that could also very easily happen. And the NASDAQ also did create kind of this flat top distribution block and then had a nice little 11% sell-off. It's not pretty, I'm aware, but it happened, and we have to acknowledge the fact that it happened. So the next level on the NASDAQ to look for a buy area would be right, and I really highly doubt this is going to happen, but it would be somewhere around this 18,500 and then all the way down to 17,000. Do I think that's going to happen? Probably not. We'll have to see what the price action is. Of course, it's always a possibility. Always be prepared for the fact that that could happen, but there's no guarantees, right? So anyways, moving on to the next one here, we'll go to the Dow Jones. So Dow Jones has had a pretty sizable pullback here, not huge like the Nasdaq, but 6.5% is not bad. Right around the level I would be looking at here for a potential bounce area is kind of somewhere in here, right about that level. Okay. So we're pretty close to it, but not quite. Right around 41,300 to 41,900. I'm aware that SCHD is based on the Dow. So if you're buying SCHD, I mean, these are pretty good prices, but you could scale in to the zone and then look for a bounce like that, or do options or whatever. Excuse me. Or if you're just you're just interested in the Dow in general, that's roughly about another 3% down. So Russell 2000, this is probably the ugliest chart that we're going to take a look at today. This one is definitely not pretty. The good thing is we have hit a major block of support here. This is a very significant level. It was a bear market resistance forever, and then it held a support. That's about 1980 to 2030, so that is the zone. We got a nice little wick bounce off of it, but again, 4.5% drop further. It could always be a possibility, okay? And then obviously the all-time highs right around 2460 would be the level to look at. The thing I want to point out here is that, again, it does appear we're massively oversold on the daily, and excuse me. So we once again have bullish divergence here on the RSI and the price. In terms of the Dow Jones, not quite getting that bullish divergence yet, but this basing formation gives me some confidence, plus the EMA is curling up on the MACD, that maybe this is the bottom and it's going to head up. Obviously, that's not a guarantee. We need to see a follow through with price. Same thing on the daily. It appears to be basing. The EMA looks like it wants to go up on the RSI. So the gist of what I'm saying here, let me get a drink real quick before I go any further. Okay, so the gist of what I'm saying here is that if there was ever a time to get into these positions, like say some dividend growth ETFs or stocks like GPIC, GPIX, SCHD, or even position trades where you plan on buying long-term at macro support levels or anything along that line, long-term holds in general, or you're an index fund investor or anything like that, now may be the time to consider maybe piling some in. Now, again, that's not financial advice. Whether this is a dead cat bounce where it's actually going to lead to higher highs or new all-time highs in the stock market and in the crypto markets, that remains to be seen. I'll tell you guys right now, if we are going to get if we're going to get new all-time highs, we need to at least get probably about above this 5850 on the S&P. We need to see some kind of structure break and then a series of higher highs and higher lows. The NASDAQ, very similar thing here. I would personally like to probably see at least a close above here around 20,600. For the Russell 2000, I would like to see a close and a retest and a bounce off of 2100. Again, that's a major psychological level. And for the Dow Jones, it appears that Jones may be about ready to lead the way. I would love to see at least a close and retest and a bounce right above this, roughly about 43,000. So that's what's going on with the indices. And again, we're in bearish seasonality. It's the perfect time to buy the dip. What you guys want to do with that, that's up to you. I'm just letting you know about the information. So next thing I want to go over here is the stocks above the 50. So we'll scroll back over to the weekly time frame here. Not really much to look at here. I mean, it's not really that oversold on the 200-day average here. Again, this was the bear market back here, so we're not anywhere near anything like that. It's cheaper than it was. It's not in the sell zone, but not in the buy zone, so kind of just in no man's land at this point. Let's see here. The stocks above the 200 on the S&P actually looks a little bit cheaper in my opinion, but again, not really oversold. This is more of a long-term investor's indicator. It's cheaper than it was, but definitely not expensive and definitely not cheap. Now, in terms of the 50-day, we already got the pretty close to oversold signal here, and again, we're kind of pulling back again. Again, not cheap, not expensive, just something to keep a lookout on. The further this thing goes down, the more attractive the buys in the markets actually become. Same thing with the S&P. It's not I don't know why this box is so big. TradingView keeps doing this. So it's not really cheap right now, but it's below 50, which indicates that it is relatively cheap. So that's something to keep in mind. Now, in terms of the yields have been dropping a little bit. It does appear that we may be getting some kind of distribution block taking place here on the 10-year. If that's anything like what I think it will look like if this thing's about ready to sell off, it keeps testing this level and it's not breaking through. So you're kind of getting a rounding top here, which is also a very bearish sign. In that case, yields would come down, risk on assets should go up. That's kind of the thesis here. The same thing with the dollars. So if the dollar risk on inflation or the dollar inflation and bond yields all come down, then bond prices will go up and risk on assets like stocks and crypto should theoretically go up, right? That's what we should see. So very similar thing here to kind of the for the 2 years. So you can see a very similar rounding top kind of formation here, and we are starting to create some higher lows and lower lows and lower highs. There's this ascending wedge pattern, which is also a bearish pattern. Again, a sell off to the bottom of the wedge, which we did confirm. So there's that. So yeah, it should be interesting in the coming weeks and months to see what happens with this. We'll keep an eye out on it. Inflation, there's not really much to talk about there. I mean, inflation is pretty much under control at this point. It's just kind of bobbing around. People need to understand about inflation that it's not going to go up in a straight line and it's not going to go down in a straight line. Everybody's like, oh God, there's going to be a resurgence of inflation. It's going to go to 10 billion%. Guys, I'm pretty confident that's not going to happen, okay? Look, let me show you, all right? So, and again, and I think I actually have to switch to the monthly for this to even make sense because it only comes out once a month. But again, you guys can see that it slowly. Actually, you know what? No, let me go back to the weekly on this because never mind. Okay, it's not going to do it. So, anyways, you guys can kind of see it's going up, going down, going up, going down, going up, going down, right? So the point to make here is the thing to look at is the overall trend, not be, in my opinion, really be concerned about fears that have not manifested themselves into reality yet. The overall trend since the 80s pretty much has been that inflation has been on a downward trajectory. Now we are in a series of higher highs and higher lows here based on the chart, but the reality is inflation has been coming down steadily over the previous months and years. So unless we see like a 0.5% increase month over month or something like that, or year over year on any given month, I wouldn't be concerned about this. I think that people are getting freaked out for nothing. So unemployment rate, I'm expecting this not to change. I think it's possible for the current administration to get to keep unemployment low while bringing down inflation, controlling and reducing the cost of goods and services, all that jazz. So slight tick up here, 4.1%. I would not be concerned about that. I would be more concerned if I saw something like this or like this, just a massive rapid increase in unemployment. That would be concerning, but I do not think that's going to happen. Okay, so next thing I want to go over here is oil. So we'll talk about oil real quick. Okay, so here we go. That was from the pandemic crash. I'm sure those of you guys that traded oil, you know that oil actually went negative, if you can believe that. I'm sure a lot of people got absolutely destroyed on those trades, and short sellers made a fortune. So if that's you, then congratulations, or sure hate it for you. I shouldn't say that. What I should be saying is I do feel empathetic for those people, but if you're in a trade position, and so especially if you're day trading on a futures contract, always a good idea to use a stop loss. So anyways, oil's in support 63 to 77. If you're taking a look at oil stocks, specifically oil stocks like Chevron, ExxonMobil, stuff like that, maybe a good idea to use this chart in correlation with those stocks to kind of give yourself an indication as to whether you think a stock is cheap or expensive to buy. But based on the oil prices as of right here, it looks pretty cheap as far as I'm concerned. SCHD is different because that has like a whole bunch of different stocks in it. Okay, so let's talk about the metals. Okay, so gold is absolutely ridiculous. This thing is so overbought, it's not even funny. I could probably actually go to the 2 month time frame, which we never look at that. And yeah, you can see how expensive this thing is on the 2 month time frame. It has led to some pretty major tops. This thing is just, it's really getting ridiculous. I mean, a pullback all the way to 1800 would not shock me under the right conditions. I would not touch gold with a 10-foot pole right now. I personally would like to see gold come back to about 1800 to 2100 before even thinking about buying any, get back to that support, previous resistance. As of for now, it did hit the cup and handle target, obviously, but as for right now, it's just way too expensive. Personally, I would not touch it. A lot of people are interested in buying gold chains and rings and all that kind of stuff. And I'm like, bro, you're literally getting robbed. You know, you could just buy it when gold's cheaper, right? Why would you do that to yourself? Anyways, um, next thing here is silver. It does appear that maybe there is some kind of, it's not perfect, but there's some kind of maybe cup and handle pattern going on here as well. If I were to measure that from the highest to the lowest point, I don't know why it's doing that. Stop doing that, please. So let's see here. Yeah, so from the highest to the lowest point, assuming that this is the breakout right here, um, we'll assume that the break is actually going to be right around the neckline, which is kind of right in here. Then silver should theoretically, and I know this is going to sound crazy, should theoretically go up to $60 an ounce. Do I think silver is expensive right now? Yes. Would I buy it? I'd be willing to nibble some, but not buy a lot. Because again, it is relatively expensive. The EMAs at the bottom are all the way down at 25. Personally, I'd like to see it come right around the low 20s again to consider picking some up. That's just me. Or see some kind of oversold signal, which we most definitely do not have on any of the time frames. The lowest time frame I'd be looking at on the metals would be the weekly time frame, but mainly the monthlies. So what's more attractive, in my opinion, in terms of a long-term hold and accumulation potentially could be palladium and platinum. They're extremely cheap right now, okay? And we just got this golden cross on the monthly, which means the prices of these may be heading up. Keep in mind, even though it does look quite bullish, a basing formation and all these indicators look bullish, it could take 6, 12, 24 months for that huge move to the upside to play out. This is definitely not a short-term chart that we're looking at here, okay? This is more of kind of like a holder's game, somebody that just wants to buy and hold for the long term. I would say it's extremely cheap, anywhere around the price it has been at in the previous months. So probably I'd say about 900 to 1,000, pretty affordable price. Platinum also looks very cheap. I would like to see it somewhere down between 830 to 770, but that's just me. It's in the middle of no man's land going nowhere. The target obviously is 1750 to 1900, so there's a lot of upside here, right? Palladium obviously is the cheapest. Copper looks like it wants to go to the moon, so that's a pretty strong indicator of economic strength and growth. Would I buy it right now? No. The last time I bought copper was during the pandemic time, right around here, right around $2-3 an ounce, or $2.50 an ounce, somewhere in there, and then sold later on. Actually, I think it was like somewhere around $3.54 an ounce. It went higher, obviously, but it's impossible to perfectly time these things. So, anyways, gold, silver, and copper very expensive right now. Palladium and platinum very cheap right now. If I was going to buy, I would buy palladium and platinum. So, last two things I want to look at here is the VIX. So the VIX has been increasing in previous weeks. Again, usually when we see these kind of breakouts, it does happen that it spikes for a little bit, but then it ultimately goes back down. You can see it literally every single time. Spikes, goes back down, spikes, goes back down. I can show you another example right here where it spikes, right? Goes back down. I'm expecting something very similar to happen here. The only thing that would change my mind is if for some reason the indices cracked the next level of support, like the S&P goes below 5,400. Okay, at that point, I'd be like, all right, now we need to have a different conversation because this is actually looking kind of terrifying. So the question is it going to happen or not? We have to wait and see. So the dollar is looking pretty weak here. I'm still expecting something like this drawing to play out, where the dollar comes down over time. As you guys know, Trump is um, he definitely wants the dollar and the interest rates to come down, and I think that's a good idea. I mean, the interest rates have been at all-time highs for what, 3 years now? It's kind of ridiculous, or 4 years, I should say. Kind of ridiculous. No, 3 years. Yeah. So it's kind of ridiculous at this point that we're still talking about inflation, right? So it's time for all this to come to a head, to a conclusion, and for us to go back into a major secular bull market, and that would be nice. And one of the things that needs to happen for that and for Bitcoin to go to the moon is for the dollar to continue to plummet off a cliff. Which means, as an extension of the dollar coming down, that by default means that money is flowing out of risk off assets like cash and bonds and back into risk on like stocks and crypto, which should theoretically pump the prices to God knows where, right? To the all-time highs. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.